Good morning, everybody. How are you guys doing today? Hope everybody's doing well. Hope you can hear me just fine. Hope you had an awesome weekend. Hey, Erla. Long time no see. Guys, welcome to the education room. Hey, Lance, good to see you. Bob B. the man, nice to have you. Sit Boy, Todd P., Badger Toe. I like Badger Toe better than Nosebleed. Great to have you guys in here. Welcome to the education room, guys. I was chuckling about that one. When you guys work with a client advisor, they let me know that you're going to be here, so I get excited about it. Yeah, you are, Todd P. It's great to have you in here. So guys, I've got a lot of new faces in here. I'm really excited about that because it means that I get to kind of talk you through the process of what to expect with education. Every day in this room, we really focus on the exact same thing. Every day in this room, we start by studying what's called a high probability trend trade. And I think that we can all agree that the goal is to get to profitable, to consistent as soon as possible, guys. Nobody wants a long process. So I teach this room with the idea that we can streamline. We can get you where you want to be the absolute fastest with the fewest moving parts. And that's kind of how I teach because it's very much how my brain works. When we talk about trading the markets, guys, all we're doing is we're looking at patterns. We're following patterns that repeat themselves every day, that prove themselves. And you're going to learn how to look at things and really speak to yourself in terms of advantages when you're looking at the market. So routines are a big part of it, guys. Day trading is doing the same thing every day, over and over. And the first thing that we do every day in this room is we check news. And this is part of my morning routine. When I pour a cup of coffee and I come in and I open up my charts, I come and I check news and I just look for both high impact, these red boxes, and medium impact, these orange boxes. Good morning, Cab. Good to see you. Congratulations hitting those goals early, Cab. It's nice when you wake up on a Monday and you're done trading before things ever get going. Because we trade patterns, guys, because we trade things that just repeat themselves over and over, these news releases, high impact, medium impact, can affect those patterns. They can make the market spike, they can make it reverse, they can make it jump. It's just a big, ugly emotional reaction from the people with enough money to facilitate change. So every morning I come and I look for them, and if I see them, I choose not to trade during those times. But today is Monday, April 28th, and there's no news. So we are just going to look for patterns and trade away. Everything that I talk about can be found from the education page, guys. One of the wonderful things is there are no secrets. Good morning, Andy. Good to see you. There's no secrets with Nexgen, guys. We're not going to say, hey, here's enough to almost get there, send me a check and we'll give you the rest of it. Everything that you need to be successful with this software, everything that you need to be consistent, everything that you need to be profitable, I'm going to give you in this first hour or so. We're going to talk about one trade, guys, and it's a high probability trade. And a high probability trend trade, I want to define it. It's a trade that means each indicator on every chart agrees with the rules for the trade. Guys, this is the best of the best. This is a trade that typically wins up to 70 to 80% of the time. And this is a trade that creates confidence through that memory of success. For those of you that are brand new with us, I started just like you did about 5.5 years ago. Absolutely no understanding of the software, what I was looking at. And I had to learn from John Novak, which is like learning string theory from Einstein. He's brilliant. And I'm a little more artsy-fartsy, true story. So I teach this classroom with the least amount of complexity and the assumption that you're coming into this exactly like I did. You know, you don't know what's going on just yet, and we're going to keep it as simple as we can. But one of the things, I love this picture because this is how I felt in my first 2 or 3 days. And this is for you new guys. And then for those of you that made it through that 2 or 3 days already, help me out here and back me up, guys. Your first couple days, it's going to feel like a lot coming at you. And I focus on keeping it simple to help you through this process. Please don't allow yourself to feel overwhelmed. By day 2 or 3, the language starts to click, the looks begin to become recognizable, and what you'll find is that this goes away pretty rapidly. It really does. We focus on this high probability trend trade each and every day, guys, because of one specific reason. It's going to teach you to read your indicators. And that's my job. My job isn't to tell you when to enter the market. I don't give trading advice. I don't tell you how to trade, how many contracts. But what I will do is I'll teach you to read your indicators so you can make good decisions, guys. And learning to read your charts is so imperative because you're learning to recognize a pattern. And what you're going to find is that about 90% of your day is reading charts. 10% of your day will be actively trading. For example, I woke up at 5:15 a.m. Central this morning, and I didn't have my rules met for the better part of 2 hours. But when my rules were met, when the pattern did present itself, that is proven to win more than it loses, I hit my goals in the one trade, guys. Patience is very often rewarded. And once you can read your charts, once you can look at your indicators and understand what they're telling you, you're going to understand 3 very key concepts. You will understand where the market is likely to continue. That's actually our entries in the beginning. Those are the entries for the highest probability trend trade, pinpointing the spot where the trend is most likely to continue. You're going to understand where the market is likely to go, and this is going to help you with profit targets. And finally, you'll understand where the market is likely to stop. And especially you new guys, if you have any experience trading futures, what you'll find is that the termination conditions, as they're taught in this room, are these giant red flags, not only to help you take profits in a great spot, but also to keep you from taking that next trade into an area that could absolutely just stop the forward progress of the market. So I think patience is really what we're learning in the very beginning here, and how to read your charts, guys. And we're going to do it with a trade that only has 3 rules. We're going to break down each of these rules individually. You will be shown how to recognize them. You'll be given study tools so that you can go back and make the recognition easier. And what we're going to do, guys, is we're going to think of each rule as providing an advantage. So when rule number 1 is met, when your large chart has strong trigger lines, you're going to have the advantage of momentum. And momentum is this amazing thing that pushes a market in the direction of the trend. Momentum is difficult to stop. Momentum can break key areas. Momentum can even cover mistakes that we tend to make as new users. So rule number 1 is very much rule number 1 for a reason, and we're not doing anything more than recognizing the advantage of momentum through it. And then rule number 2 is going to keep you from trading into those areas that have the potential to stop the market, that are likely to stop the market, because you want room to your profit targets. And we're just going to call that advantage a clear path. Once you can identify momentum, and once you understand how to recognize a clear path, you have everything that you need to be successful, to create a very consistent trading plan. You're going to see people in this room whose entire trading plans revolve around momentum, which is difficult to stop, and a clear path, absolutely nothing in the way to create a bounce, guys. And when you have those 2, you are destined for the promised land. Your third rule is specific to trend trades, and that's the one that's going to pinpoint where the market is most likely to continue. Where it's most likely to continue, where it's most likely to bounce. And that's those, sorry, I'm trying to multitask and look at Lonnie's chart. Guys, this entry area is where the precision comes in. And it's very specific, and it's very precise. And it's the entry area that allows you to reduce risk and that allows you to increase your profitability. And Lonnie, if those yellow one-to-ones stop printing, then they're done. So your second arrow to the right is just pointing to a loss of momentum, but those yellow one-to-ones are in the rear view mirror because they stopped printing. I hope you caught that. Awesome, you're welcome. It only takes 2 charts to recognize these 3 rules. Again, simplicity is really my focus. There is a large chart. And guys, your large chart is a slow moving chart. Your large chart will first define the direction of the market, letting you know which way you should be looking. Your large chart is going to let you know that you have momentum through rule number 1. And your large chart is going to define the areas that could be problematic, guys. And the large chart leads the way. It's a big, slow chart. It's a slow-moving, broad stroke of a brush, guys, and it shows the overall opinion of the market. And you'll be able to recognize direction, momentum, and areas through the first bar, the most current bar. The first printing bar on the large chart gives you 66% of your rules and advantages in play. Once the rules are met on the large chart, in this one bar, you'll turn your attention to a smaller chart, and this is a faster chart. And all it does is it refines that very broad stroke, and it shows the inner workings through a faster time frame. So inside of one big slow bar, you're going to see 20 to 30 smaller, faster bars on that smaller, faster chart. And this is where you're going to pinpoint where the market is most likely to continue. You're going to use that small chart for entries. It is going to increase accuracy. It's going to reduce risk, and it's going to give you the furthest possible distance to get to your profit targets, which increases profitability. And rule number 3 is specific to a small chart. And rule number 3 is only entertained and put into play when the large chart says that it's time to look for an entry. We use these 2 charts because it lends itself to a pretty cool metaphor. Ask yourself, who are you trading with or who are you trading against, guys? And the large chart we think of as the large crowd. These are the men and women with the money, with the influence, with the backing to create trends, to establish momentum. These are the same men and women that are reacting at those key areas. The same key areas that could stop forward progress. So the large chart leads the way. The small chart is the small crowd, and the small crowd loves to fight. If everybody in the large crowd's like, hey, today we're going up, the small crowd says, we'd really rather go down. And they create what's called a retracement, which is just a small pushback that is counter to everything that the large chart says. These little pushbacks, these retracements, these fights, whatever you want to call them, they're typically short-lived. And your small crowd very often fails up to 70 to 80% of the time, which means when rule number 3 on that small, fast chart gets you in where their failure is imminent, most likely to happen, it puts you in a position and it gives you the potential to win up to 70 to 80% of the time. So know who you're trading with, know who you're trading against, and this is how the morning goes, and this is how it goes every morning. So Todd P. and Badger and Sit Boy and all of you that are new with me, I say the same thing each and every morning. It's really, the dead horse is taking a beating with me because repetition is what creates the recognition, guys. It's like going to the batting cages. It's like going to the driving range. So we're going to it takes about 25 minutes, and you guys are going to learn the trigger line and the Fibonacci rules for when it's okay to trade. And it's okay to trade, let's get him off of there, when the rules are met. Because your rules describe a pattern, and that pattern has been proven, and it will be proven by you to win more than it loses. So as a brand new user, focus on rule adherence, focus on taking the correct trades, focus on having those 3 advantages, and practice. Practice taking those trades, simulate. And then this is the most important thing, I think, and a step-by-step path to becoming a confident trader. Post your trades in the room. Post your questions in the room. Don't be shy. You cannot monopolize my time. Nobody has ever upset me by posting too many pictures. If anything, it's just the opposite. I get a little sad when you guys aren't posting pictures. And every time you post in the room, guys, and this is probably what makes the education so effective, is it's like getting a private session with me. You're saying, hey, Mark, check it out. This is what I did, and this is where I did it, and this is why I did it. Did I read my indicators correctly? Could I have had a better entry? Was there an easier way to take profits on this? Did I hold too long? And every time you post in the room, guys, you're going to get that session. I'm going to single you out, and we're going to talk. And if you'll do me a favor, go through those 3 rules when you post. Or like Lonnie did, if you have a question, throw your picture in there and say, hey, Mark, is this a termination condition? What's going on, man? And you'll get that answer. And the answer was easy. As soon as these yellow ones stop printing, Lonnie, they're no longer in the equation. They're no longer a part of it. And with price all the way over here, couldn't care less about them. And Lonnie's like, okay, cool. Appreciate the clarity. And then, whoops, where'd my picture go? Point out the 3 advantages: momentum, path, and entry. Talk about them on every chart, and we'll just make sure that your chart reads are accurate. The hope is that you don't practice the wrong rules, that you're not taking the wrong trades. You will in the beginning. You will make mistakes. Don't put the pressure on yourself to be a perfect trader because you walked into this room. You'll make all the mistakes, but what you need is someone to tell you that they were mistakes, someone to tell you how to fix those mistakes. And that's my job, is to get your chart reading to a point to where you can look at your charts and say, wow, I have momentum. My path is clear. Let me go define an entry because it's time to take a trade that's been proven to win more than it loses. We're going to simplify. I'm going to oversimplify, to be honest with you. One of my favorite phrases for new users is you just don't need that yet. You don't need that yet. You don't need extra charts. You don't need more rules. You don't need addendums to these 3 rules. Let the 3 rules lead the way and learn the looks that you're going to commit to, guys. You've got to learn these Fibonacci and trigger looks so that they become easy. Again, that's my job, is to help make these easy. And one of the ways we do that is through the spreadsheet that I give you each and every day. I'm going to drop it in the room. And I drop it in here every day because almost every day I update it in some fashion. The first tab, there's 4 tabs. I call it basic rules. And it is each of the 3 advantages in the green sections, guys. Exactly what it looks like to have the rule met. Good morning, Joel. It's a picture, and we'll just, we put one in there the other day. It's going to be a picture of strong triggers. It's going to be an annotation as to why they're strong triggers. There's going to be an arrow. And what you're doing is you're creating this correlation between what it looks like to have the advantage and what it means to you in your brain to have that advantage. And that's what makes the chart read happen rapidly. So strong triggers, clear path, and entry, guys. Those are your advantages. If your goal is to trade when the rules are met, well, it means that you're going to be willing to not trade if they're not met. So here's a section for weak triggers and a section for termination conditions. And the opposite of having your rules met, because what you're doing is committing these looks to memory so that you can give yourself the highest chance of success each and every time you go to take a trade. The second tab is the client trades. And this is where you guys post in the room and you say, hey, Mark, I need feedback on this one. Did I read it right? Did I enter in the right spot? Do my stops make sense? And I'll be like, oh my goodness gracious, Badger Toe, Todd P, that is the greatest look I've ever seen in my life. That is the perfect high probability trend trade. And then I steal it from you, but I give you credit. And there's over 500 pictures of Nexgen users doing amazing things with this software. And I just put them in here so that you guys can have something to study to make those looks even easier. Good morning, Miss Cindy. Nice to see you. When we're defining entries, I've put in the entry sequence, how to identify that highest probability trend trade on the small chart for both longs and shorts. There is management, this orange section, And initially, these first 4 pictures are the management from the plan that I'm going to hand to you before at the end of this first hour. And this management plan is very mechanical, the same way your entries will be. And it's very pragmatic and it's very emotionless, guys. But you're going to break out of simplicity. The more you learn to read your charts, the more you're going to see. And you can begin to build a management plan based on what you're seeing each and every day taking these trades. And that's where the next tab comes in. All the pictures that you take go into this one. Every time you take the perfect trend trade, or when you're studying and you go take a picture of that pattern, I'm going to teach you how to do that. Start dropping them into this green section. These are the pictures that you're going to commit to. And when you begin to recognize these patterns in still pictures, it slows the market down a lot. The market doesn't feel like it's moving as fast as it did on day one. As you begin to grow a management plan, the orange section, start putting your pictures in there. And every time you post in my room and you show me a start to finish trade, if there was a reason to exit or a reason to hold longer, we'll discuss it. That'll help you build your management plan. And you're going to begin to see patterns. The first pattern is the highest probability trend trade. You're going to start to see more patterns. When that trend trade becomes a little effortless, and it will through repetition, you're going to start to see more opportunities. You're going to see different ways to manage different patterns, and you can begin to take pictures here. I always encourage new users, plan on taking 15 annotated pictures a day. It's really not much, because by the end of 30 days, you have 300 annotated pictures. By the end of 90 days, you're up around 1,000 pictures, guys. And the easiest way to become a day trader, to become a chart reader, to become comfortable isn't necessarily to take trades and hope for the best, but rather take pictures, guys. And this is 2025, and I'm just under 2,500 pictures. And we're still in April. So I'm pushing right around 600, about 30 pictures a day annotated. When I'm studying, guys, I go through and I take more pictures than most people in the room. The final one is the trade tracking sheet. And this is even the CME. If you go and Google from the Chicago Mercantile Exchange, you're like, how do I become a day trader? They're going to tell you, track your progress, have a plan. We're giving you all of that. This is how you're going to track your progress, guys. You're going to take every trade that you take and you're going to drop it into this section. And there's how to annotate for the best feedback, meaning that you're telling me exactly what you're seeing, exactly why you did what you did. And it's not just for me. I can look at your charts and know what you did. It's because you're going to come back and study these pictures, guys. So it's important that you drop the picture in, and more importantly, that you put the feedback that you get in class into the notes section here, because each and every morning, I'm going to show you how to get to where you want to be the fastest. Every morning, I wake up and I look at what I did yesterday. And I typically only take 5 or 6 trades a day because I'm waiting for my rules to be met. So this isn't a really long endeavor. But I ask myself each morning, what worked? And what I'm going to do is I'm going to start to see a correlation between the success I'm having and the patterns that I'm trading and the advantages that are present. And then I have to ask myself, and this is a hard question, what didn't work? And typically what doesn't work is when I break a rule. So I have to hold myself accountable to my plan, because my plan has been proven to win more than it loses. And then this is an important one. I ask myself, what felt easy? When was I relaxed taking trades? And more importantly, when was I nervous? And again, there's a definite correlation between following your rules and being comfortable in the trade, not moving stops all over the place, not adjusting your targets 5 or 6 different times. And then when you're nervous, it's because you know you broke a rule, because you know that you're relying on hope rather than a pattern that's been proven to win more than it loses. And if you do this little historical study each and every morning, guys, it will accelerate the learning. There's no doubt in my mind. It will accelerate the learning. So commit to pictures, guys, and commit to taking a little bit of time to look at what you did yesterday to set you up for a better today. This is the path. It's been the path. Nexgen's been teaching people to read indicators and day trade the markets for nearly 30 years now. And as long as there's been chat rooms, guys, posting in the room and getting feedback, understanding what you did right or wrong, and then track your performance. Know what you're looking at. Take those pictures. And by the end of this first hour, and the first hour is very lectury, I understand that. Feel free to interrupt me if you have a question. By the end of this first hour, my pledge, my promise, my guarantee is that you will have everything that you need to be successful with the software, with the exception of the experience, for it to be easy, for these patterns to be recognizable. So that part's on you, and we're going to teach you how to get that experience. But let's start with looking at indicators first, guys, because the whole goal is to learn how to read your indicators. Each chart, both the large and small, and actually if you begin to add other charts, I'll have these as well, there are trigger lines. Trigger lines show up in everything. There's two. There are small triggers. Those are the solid lines. These are a fast-moving average. You can see them going up and down. When they're green, they're up. When they're red, they're down. And then there's large triggers. And large triggers are a slower-moving average. They're going to be dashed. And these dashes, these big slow triggers, when they're up, they're green, and when they're red, they're down. There's a lot of color coding that goes with this. You will use trigger lines initially to define momentum. These will be your momentum indicator. You're also going to use trigger lines to define termination conditions, those areas that could stop the market. And then, yes, you'll use these large trigger lines to define your entries, guys. And the only thing that you need to know is that these are small and these are large, and I'll tell you how to use them. Both charts will have areas. Areas have names. I don't want you to worry about the math that goes into creating them. It's one of the great things about coming into the software. Someone's done the smart stuff to create them. I'm going to teach you how to use them. There are divergence high lines. It's a magenta line. And guys, this magenta line is just a huge signal that says, hey, there was a loss of momentum at this pivot. The market was pushing up and then it went down. Momentum wasn't following price. Here's the magenta line to let you know. If it happens from a low pivot, it's a cyan line. For those of you that are not artistic, magenta is a way of saying hot pink. You remember the 80s. And cyan is baby blue. You'll see Fibonacci resistance, and this is a red line. It runs horizontally along the chart. When the market is trending up, this is a point that could stop, bounce, or reverse the market. We're going to use these lines for termination conditions on the large chart. In a downtrend, the blue line, Fibonacci support, does the exact same thing. And then you have yellow one-to-ones, and these yellow one-to-ones, they're fibs that print in the moment. They will print and then they'll stop printing. And if they show themselves around price action, they could behave as either resistance or support. And then finally, you have this mid-band that runs through the middle. It's just a moving average. And when price is above it, it'll turn green. It can be used as support. When it's magenta, it means price is below it. It can act as resistance. All of these areas on the large chart, guys, these areas are where the big crowd, where the people in charge are making decisions, where buyers buy and sellers sell, where fights happens and reversals typically come from. On the smaller chart, you're going to use these areas for entry. So they have a different role depending on the chart. But the large chart leads the way. And we're going to get into rule number 1. Are there any questions before I get going, guys? I encourage you, interrupt me, jump in, type in. If you have a question about what I'm talking about, let me know. Otherwise, you new users will notice that there's people dropping those picture links in the room, and you're like, gosh, why is Mark ignoring them? I'm not. We go through the rules in the first hour. We talk about them extensively, how to study them, where to study them. And then in the second hour, that's where the feedback comes in. As we get into the second hour, we're going to begin looking at everything that you guys post in the room. We're going to talk about those advantages. However, if you have to leave early, maybe you have to go to work, maybe you have a doctor's appointment, you got to take the kids to school, just let me know. Go, hey, Mark, I got a split at 10 Eastern. If you'll do me a favor and give me a review so that I can get that feedback, the answer is always yes. We're going to let the large chart lead the way this morning and every morning. And it must have strong trigger lines, because strong trigger lines give us the advantage of momentum. The only way I can have strong trigger lines is to trade with the trend. It's a little safeguard, I think. If the background on my large chart is green, I'm in an uptrend. And if the background is red, I'm in a downtrend. And I'm only looking for rules to be met, going in the direction of the trend. And that works out great because if I'm following rules, the only way I can ever have strong triggers in an uptrend is if my trigger lines are green. And the only way I can have strong triggers in a downtrend is if my trigger lines are red. So the colors have to match. What it means to have strong triggers. In an uptrend, my small triggers are up and above the large triggers. Large triggers need to be wide going up as well. And then it's that space that's created between small and large, guys. That space lets me know that I have strong triggers. In a downtrend, smalls are below the large are wide. The space is there letting me know that they're strong. And I'm going to give you my visual. And I think this is helpful for a lot of people. Hopefully it's helpful for you. Let me get a pen here. Guys, I want you to picture scissors that are open. And when scissors are open, that's when you can cut. That's when you can get work done. Strong triggers are when the scissors are open, guys. And when you have strong triggers, when you have those open scissors, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum. You're going to see it annotated on charts all day long. OFM. Odds favorable momentum. Strong triggers, guys. That market is likely to continue in the direction of the trend. Odds favorable momentum is the same look that we want to say that the key Fibonacci areas have the potential to break. Odds favorable momentum, when you have it on the large chart, those single bars that are showing it sometimes sprout wicks or tails. You're going to look for entries on a small chart with this advantage. You'll actually be able to pinpoint using that refinement chart where these tails are most likely to form. So anytime you see that strength on a large chart in one of these tails, you could say, wait a minute, there might have been a potential entry. Let me go study that. And guys, my favorite thing about strong triggers is very often it can cover the mistakes that new users tend to make. Accidentally trading into a termination condition with all of that momentum, sometimes you get a lucky break and it retests the area and you can get out without a loss. Momentum is rule number one for a reason. And guys, momentum doesn't last forever. So this is strong triggers. This is rule one met. This is the advantage of momentum. This is the feel good look. Well, when your scissors close, when those small triggers work their way inside of the large triggers, we call this a weakening of the large triggers. So it's the difference between strength and weakness. And it's the difference between the odds favorable for the market to continue in the direction of the trend. And guys, with weakness, anything can happen up or down. And this is where the market can reverse from the middle of nowhere. This is where those key Fibonacci areas tend to hold a little bit more. And if we go back to a large chart, and we'll see it here, strong triggers, and the market is trending up and it's breaking key areas, and then it's weakness, where the market retraces. And then you get the colors that don't match. And that's where the downtrend starts. There's one of those tails. That's a potential entry. And then it goes back up, and weakness is where it comes back down. And guys, there's weakness right at a key Fibonacci area, and that's where the push up starts. And you're going to be able to go back and study this look to say, wow, look at that strength. There's a potential entry. And then even closer to the current market, there's strength, and there's a potential entry. And then guys, if you look at that most current bar, the smalls are below the large and space is present between it. And guys, you have strong triggers. Can you give me a Y if you see it? On the most current bar here, whoops, separation between the small and large. It really is that easy, guys. That's the look. It's either going to be strength or it's going to be weakness. And that's rule number one. And strength is great. And new users, don't be afraid to throw a Y in the room, or even more importantly, if it doesn't make sense, give me an N. Say, Mark, that doesn't make sense. Say it differently. I'm always happy to. Once I have momentum, I have to make sure that there's nothing in the way. No termination conditions. because I want to have room to my targets. I want to make sure that there's some room to make money. Termination conditions can stop the forward progress, guys. I want a clear path. On the large chart, termination conditions can be those areas, those fibs, those yellow one-to-ones, those divergence highs and lows. These are where the people that move the market are making decisions, guys. And when John Novak created the software 30 years ago and was writing the algorithm, he had a friend in the pits in Chicago whose only job was to know where the institutions were buying and selling. And of course, he couldn't tell John Novak where those areas were, but John Novak could send us fibs and say, hey, am I close? And it was when daily he was within 50 cents of these potential turning points. That's when Nexgen was born, guys. These are the areas where decisions are most likely to be made. So to identify one as a termination condition, you do two things. The first thing you do is you let price reach the area. Price moving up, everything says go, and then it reaches Fibonacci resistance. And when it reaches Fibonacci resistance, we're actually done with price. We don't need it anymore. Your trigger lines will tell the story. And if price reaches resistance, you're going to ask, where are my triggers? And if the answer is my triggers have remained below resistance, resistance is a termination condition. And there's one of four things that happen at a termination condition. The market could reverse completely. There could be a giant untradeable bounce. It could break. Or there could be a fight set off between buyers and sellers that you just don't want to be a part of. And the truth of the matter is that you'll never know what the reaction is going to be. There's no signal, there's no way to anticipate. So if price reaches resistance and the triggers remain below, it's a termination condition, which means that rule number 2 is not met. And the easiest way to stay away from avoidable losses is absolutely no trades into the area. And then the market comes down and it reaches Fibonacci support, and the recipe is the same. Price reaches Fibonacci support, and then I no longer need price. I have to look to my triggers to get the answers. And if my triggers remain above Fibonacci support is a termination condition. And because it's a termination condition, the market could bounce, they could fight, it could break, or it could reverse completely. But I don't know what it's going to be, so rule number 2 is not met. Absolutely no trades into the area. And guys, this is exactly what it looks like to have a termination condition. Every line that you reach will be a termination condition, at least for a moment. And sometimes they break. And if they break, it looks like this. And if they don't, it looks like this. So termination reverses the market. Guys, that's a strong top. That's the precursor to the highest probability trend trade you could ever take. Termination condition reverses the market up. That's the strongest bottom you could ever have. That's the precursor to the highest probability trend trade you could ever take. If the area is going to break, again, the trigger lines are going to tell us. This is what it looks like, guys. And first, it's a termination condition. Price reaches the area. Your small and large triggers remain below. There's no trades into the area. Wait for the reaction. An area is considered broken. We're going to jump to number 3. An area is considered broken when both the small and the large triggers get above that area of resistance, both lines of each. That's what it takes to break an area. It has nothing to do with the price bars. It has zero to do with the color of the fib. It has everything to do with the triggers. And when the small and large break above resistance, resistance behaves as support. And when the path is cleared, that path remains clear until you reach the next area. And once you reach the next area, you go back to number 1. And you're back into that termination condition, and the process starts over. Somewhere in between termination and clear path is the potential to break. This is going to be the second trade on the plan that I give you. This is a trade that relies on odds favorable momentum. You have to be able to recognize strong triggers to take this trade. You have to recognize the trigger location. We call this a 50-50 look. 50% of your triggers have gone above the area, 50% remain below. As long as you have strong triggers, this area has the potential to break. But if you take a trade. Because it's only potential and not a clear path, you're just going to manage a little more assertively. You're a little more aggressively. You're going to look for changes that say, hey, you know what? It may not actually break. Maybe I need to manage and get out of that trade a little sooner. And let's take a look. Whoa. So that big run up started from price reaching a divergence low and the triggers didn't break. And sure enough, off it goes. Price reaches another divergence low. Yellow 1-to-1s, they don't break. There's a big untradeable bounce. Back into a divergence low. Look at how rule number 2 is defining an area of consolidation. I can't go short, and I can't go long, and I can't go short, and I can't go long. And guys, this is where users get chopped up. This is where traders begin to form opinions. And you don't have to. Rule number 2 is defining clearly that you need to sit on your hands and do nothing. So let it be a termination if it's a termination. Insist that it's a clear path initially, and it'll open the doors for that potential to break. And we do it go in both directions, guys. So price reaches support. Where are my triggers? They remain above. No trades. Wait for the reaction. It has the potential to break. I can take a trade, but I have to manage a little more assertively. And then there's my clear path. And when I have a clear path, my path remains clear until I reach the next area. And that is where I have to deliver bad news, guys. There will be times when your path isn't clear because areas are stacked, because it's multiple fibs, because it's fibs 1-to-1s, divergences, whatever the case may be. This is 90% of your day. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is waiting for advantages. Guys, that's okay. The futures markets trade billions daily. Billions, sometimes trillions are exchanged daily in the futures markets. The S&P trades on an average of $173 million a day. You need $400. That's it. $400 creates a 6-figure income based on your trading. So it's not a matter of being the first one in or the last one out. You don't have to be in every move of the market. Train your brain to believe that the easiest money is made with momentum and absolutely nothing in the way, and you'll find your opportunities. The next trade is coming. Can you guys give me a why if you're with me? That is termination conditions, guys. And look at that one. It reversed the market, and sure enough, off it goes with odds favorable momentum. There's one more termination condition that I'd like to talk about. And this termination condition happens on every time frame, guys. It happens on small time frames, large time frames, range charts, and it's 3 divergences in the same price range. 3 divergences, 3 losses of momentum in the same price range. Anytime you see it, you're going to say, okay, that could stop the trend. That's it. And you'll see it on a small chart first. This picture is a great example of the refinement that the small chart creates. Inside of this one bar on the large chart is a push up and a push down and a push up and a push down and a push up all the way up to here. And within that one bar, your small chart shows 3 divergences. And guys, this is the only small chart termination condition. This is the only time on a small chart I'll say, okay, I'm not going to take that high probability trend trade, even with momentum. Even with a clear path, 3 divergences could stop the trend. But if there aren't 3 divergences, we're going to define an entry area. Your entries are specific, they're calculated, they're very precise. And you're going to use a limit order, meaning you'll wait for the market to come to you. And you're going to use a limit order to buy or sell a pullback, that fight from the small crowd. And you're going to have that limit order waiting in an area, a fib at a mid-band, a yellow 1-to-1. And that area, and this is so important, new users take note, must be inside of large triggers, because large triggers define where the retracement is most likely to go. This is a phenomenon that happens on both the large and the small chart. Price typically returns to the large triggers. So on your entry chart, on that 5-1, that smaller, faster refinement chart, you have 5-1 large triggers. They're smooth. You're going to use these with the smalls to define momentum. And then you have the 13.2 large triggers. They have little steps on them. We call them synthetic because they're from a different time frame. So your entry chart will have both 5.1 and 13.2 large triggers. And these large triggers, all they do is they define where the retracement, where the pushback, where the fight is most likely to go. So from the top line to the bottom of the line. And the tighter these are, one on top of each other, the more accurate your entries become. So I like to say, let's buy or sell a pullback in an area inside of favorable large triggers, guys. So your two charts, Todd, great question. You have two charts. You have a large chart and you have a small chart. And your small chart's your entry chart. Your large chart is a 13.2, and that's only a reference to bar size. And the 5.1 is your small chart. So when we talk about 5.1 triggers, we're talking about, and here, let's just go to, let me show you two workspaces here, or two charts in a workspace. This is what your workspace looks like. So you have trigger lines on both charts. You have both large and small triggers on the large chart. You have both large and small triggers on the small chart. Are you with me? One of the ways that we can increase accuracy of entries is we have synthetically, watch this, if I put a circle on the large charts here, large triggers, they line up with those synthetic triggers over here. So what we're doing to increase the accuracy for entries is your small chart will have not only its native large triggers, but also those large triggers from the large chart. Does that make sense? Did that answer? Good question. I love the questions, guys. And what we're going to do is we're going to allow those two to just be one on top of each other, guys, like two snakes riding piggyback. We call this favorable large triggers because price tends to turn to the large triggers. So if both the small chart and the large triggers are in the exact same spot, guys, that's exactly where price is most likely to retrace. And then when you put a fib, a midband, or a yellow 1-to-1 inside of those triggers, that's precisely where it's most likely to bounce and continue with the trend. So when we're looking for an entry, and we're gonna put one together right now. First, foremost, most importantly, you're allowing the rules to be met on the large chart. You're insisting on the advantage of momentum. You're demanding that the path is clear. And in this particular instance, your large chart is going to look just like this one. Your large chart is going to have strong triggers. Your large chart is going to have a clear path. And your large chart has told you that it's time to go to the small chart and look for an entry. Your small chart is probably also going to have strong triggers. And your small chart, we don't care if it looks like it has a clear path because termination conditions are defined on the large chart. And what we need is the beginning of that pullback. We need that fight from the small crowd. And it looks like a reversal bar. That's it. Your small chart has all of these up bars. Your fear of missing out is kicking in full tilt. And you're like, oh my gosh, I'm never going to get paid. And then that magic reversal bar happens, guys. And this signals the beginning of the retracement, the beginning of the pullback, the beginning of the fight, however you want to say it that makes it easy for you. And then we know price returns to the large triggers. Guys, it's a moving average. It's the, there's a term for it. You math people know it when price returns to the mean. Regression, revision of the mean. So your entry chart has large triggers and synthetic triggers. Those, thank you, Jen, reversion. I need Gabe here. There's the large triggers, there's the synthetic triggers. So I'm gonna just draw a box from the highest line of the triggers to the lowest line of the triggers here. And this is where the market is most likely to retrace. This is where those down bars are most likely to continue down. And all I've done is define the retracement zone. And the tighter these are one on top of each other, the smaller that box is. But the box is about to get so much smaller because trigger lines are not an entry. Trigger lines are not bouncy. When I identify the trigger lines, I know where the market may return. I need an area. I need a fib. I need a mid-band. I need a yellow 1-to-1 or any combination of the three. And I need them inside of triggers. And one of the things you new users will notice is that every time I define an entry on a chart, every time I annotate it, I go all caps on these trigger lines inside of triggers. It's so important. And this box, from the highest area inside of triggers to the lowest area inside of triggers, this shows me where the market is most likely to bounce and the direction of the trend from the large chart. This is defining where the small crowd creating that fight is most likely to fail. And guys, this box, this window, the window of opportunity as I like to call it, this is how you're going to define your entry. You're going to define your entry and activate a limit order, and you're going to have that limit order waiting a tick or two above that highest point of support inside of triggers. Because your large chart is going up, it's going up fast, and there's nothing in its way to create a bounce. We're not going to trip over a couple pennies hoping to save a few dollars, guys. And your limit order will be activated, and then you're done. There's nothing else you can do. You've identified your advantages, you've recognized the pattern, and now you're waiting and hoping for an entry, guys. And if that small crowd can push down to your limit order, you're in a long position. And you're not just in a long position hoping it goes up. You're in a long position with the advantage of a market where the odds are favorable for it to continue up. And you're in a long position with the advantage of a clear path giving you room to your targets because there were no termination conditions. And you're in a long position with the advantage of having entered precisely where the market was most likely to bounce based on a pattern that's been proven to win more than it loses. And guys, this is your high probability trend trade entry. This is your first 30 days with Nexgen, guys, is being able to recognize momentum. That lesson typically takes most people a day. And then being able to identify termination conditions. You might have to commit a couple days and 50 pictures to it. And then defining your entry on the small chart. Knowing that the reversal bar begins the pullback, that's the signal to find your entry. That's not the entry itself. And you can define where that pullback is most likely to go with the large triggers, with the synthetic triggers. And the tighter they are, the smaller that box becomes. And you know that entries don't come. Good morning, Alessandro. You know that the entries don't come from triggers because triggers aren't bouncy. They need a fib, a mid-band, a yellow 1-to-1 inside of that retracement zone. And guys, this blue shaded area is your window of opportunity. Your areas inside of those favorable large triggers. From the highest area to the lowest area, this is where the small crowd is most likely to fail. This is where the market is most likely to bounce and continue in the direction of the trend. And any line, any fib, any mid-band, any yellow 1-to-1 that is on the wrong side of these triggers, that is below the retracement zone, that is below the areas inside most likely to create a bounce, this line is not a part of the window. It's not a part of the equation. And once price gets below these triggers, you don't know if, when, or where that market is most likely to bounce and continue. Could you guys give Alexandro a Y if you could hear me, please? Awesome. Thank you for that, guys. And if you ever can't hear me, let me know. And then you'll see a bunch of Y's behind. And that's everyone saying, well, yeah, we got you loud and clear, Mark. And very often you'll just need to reboot. So go in the other direction. Guys, this is futures. We make it both ways. When the large chart rules are met, when the momentum is strong, when the path is clear, you're going to wait for the reversal bar. But the reversal bar is not your entry. You're going to define where that retracement is most likely to go with the trigger lines, but the trigger lines is not your entry. And then you'll define where it's most likely to bounce, where the small crowd's most likely to fail, using areas inside of those triggers. And guys, this is a magical moment. There is one line, one area inside of triggers, and sure enough, that's precisely where the market bounced and continued down. And any area beyond the trigger lines, on the wrong side of the trigger lines, that's not a part of your equation, guys. Once you get past the retracement zone, You don't know if the market's going to continue down. You don't know if the market's going to bounce, if the trend's going to continue. So by defining where the market is most likely to continue, you now understand where the market should not go. In 54 minutes, we haven't discussed management. This is going to be the first active step in management. Initial stops are placed where the market should not go. And that's generally 4 to 5 ticks above the trigger lines for a short, below the trigger lines for a long, guys. And if the market pushes past those areas inside of triggers, past those trigger lines, I don't want to be in that trade anymore. The advantage of rule number 3 is no longer in place, and I'm willing to exit, and I'm willing to take a loss. And here's your reminder that anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Every 10 high probability trend trades I take, I'm likely to lose 2 or 3 of them. And I don't get to pick which 2 or 3 I lose. I can't say something like, oh, I have to have a winner on this one. You'll never understand what the market's going to do. You'll never be able to predict it. The only thing you can do is trade the pattern. Trade the pattern that has been proven to win more than it loses. And this is what it all looks like together, guys. With odds favorable momentum, when the path is clear, let's take a picture here. The market is all the way up here, guys. When your rules are met, the market's trading way up here. And you're going to say to yourself, well, shoot, there's only $80 worth of profit potential to get to that trouble spot. But price hasn't reached the trouble spot. The path is clear. This is where those tails come in for study purposes. We don't trade the tails. We predict where the tails are most likely to form with the areas inside of favorable large triggers. And by waiting for the pullback, by getting in above those areas, that $80 worth of profit potential turns into about $300. You have maximized your profit potential. And if your stop goes where the market shouldn't, by getting in at that low point at the area inside of triggers, you've minimized your risk. And guys, this pattern, this look, this is the easiest way to develop trust in this trade. Not to go back and keep taking trades and hoping for the best and getting mad about your losers, but rather by taking pictures. So if I go back, and we'll do it right here, on my large chart, this is the S&P. If I have momentum and a clear path, I'm going to circle a tail. And I'm going to scroll back, and man, that tail didn't get to my areas inside of triggers. Probably not my entry. So I come back here, and I think I had another one. Nope, there wasn't one there. And I'm going to back up, and there I had momentum and path. And let's pull back and see what it looks like on a small chart. And sure enough, it pulled back to a mid-band, but the mid-band was on the wrong side of the triggers. Guys, we're over 2 on identifying the pattern that wins more than it loses. So we'll go back a little bit, and just a little heads up, these circles were about 4 or 5 minutes apart. And there it is. There's your entry, guys. Odds favorable momentum. It hadn't reached the area. And look at that, 2 ticks above a mid-band right inside of triggers. This is your pattern. Let's blow it up. Your job is to circle these tails. And if you can take a picture and point to the trigger lines, and if they're actually separated, you have odds favorable momentum. And at the top of that bar with the tail, if it didn't reach the area, you have a clear path. And then over here, type it in. Pull back to an area inside, I'll just say, of triggers. Or trigs. Ladies and gentlemen, this is your pattern. This is your highest probability trend trade. Take that picture, drop it in the room, and say, hey, Mark, did I read this right? Mark, do my advantage reads? Did I do it correctly? Was that the right entry? And I exited right here at that red line. Is that okay? Was that a good exit? And guys, we'll talk about it. And we'll talk about everything that you see. And your feedback is going to be absolutely, what an amazing look. That's your trade. Go to your trade plan and drop that picture in there. And call it perfect. And for you guys that are brand new to the spreadsheet on the trade tracking, there's exactly how to post your pictures. And then you're going to come back and study these. And you're going to say, oh my gosh, that was the best of the best. And then you're going to scroll back. And there it is again, this time with the potential to break. And it pulls right back to the mid-banded resistance, right in the retracement zone. And sure enough, it continues down. Are there any questions? Oh, I'm about to crash my Ninja Trader. Too much scrolling. Are there any questions about the high probability trend trade, guys? Any questions about, whoa, I have to reboot. Momentum? Any questions about path? Lonnie has to be at work, so I have to get Lonnie's pictures real quick. And guys, we're going to head into the second hour. As we get into the second hour, I am going to, before we look at charts, give you everything that you need to study, to go back, to be successful with this stuff. But first, we're going to get Lonnie's, and this is what the second hour is going to be. We're going to take a look at your charts, and we're going to say, all right, Lonnie says, I had a weak top. I had an area, I had a market that reversed, and it didn't reverse from an area, it didn't reverse from a termination, so it's a weak top. But I had strong triggers, and I had one of those 50-50 trades, and Mark, I took my entry just right at the mid-band, right inside. And guys, this is the one that we just went back and circled. Lonnie took it and made money. And I love this. Emotionally, I was sweating, and my mind said, move the stop. The trade is going against you. And then Mark's voice jumped in and said, don't do it. Trust the system. And what a great looking entry. And when he says kiss target, he means the plan I'm going to give you has a very mechanical management plan. And Lonnie, great looking $300 trade. Whoops. There we go. Let's look at the next one. Strong bottom. It was a termination that reversed the market. Odds favorable momentum, 100%. Pull back to support right at the triggers. And once again, $300. Entered with a pending order. Entered with a limit order. Waited for the market to come to him. Called his shots. Lonnie, you are absolutely rock starring it, my friend. Great job. Great job, great trades. Guys, I'm going to take 5 minutes. I'm going to pull up crude oil as well here. I'm going to go stretch my legs. I encourage you guys, take a break every now and then. Stop looking at your computer screen. Crude oil's coming up right now. When I come back in 4 or 5 minutes, guys, we're going to start clicking on every chart. New users, Todd, Badger, Aaron, Sip Boy, guys. Ask a million questions. And I know in the beginning you're like, I don't know what questions to ask. If you see something, just throw it out there. I'll be back in about 5, guys. Go stretch your legs. All right, guys, here we go. Anyone here in their 20s? Morgan is one of my young ones. Guys, before we get into the chart reads, one of the things that I give you every morning is how to get to where you want to be quick. My coffee just hit. I had to take the break. There's an easy way. There really is, guys. There's a low stress way to getting good at this software quickly. And again, it has nothing to do with continually taking trades and hoping for the best and hoping something sticks. Pictures are going to pay dividends, guys. So this document, and I'm going to give you all of these documents. I'm dropping a zip file in right now called Everything You Need. Everything that I share with you right now is going to be in there. This is the Chart Reading 101 document. And I put this together a while back because I was noticing that newer users were looking at the markets and becoming overwhelmed. They're like, there's too many moving pieces. And I was like, okay, so what worked for me? And this is what I did. This is what John Novak taught me to do. He goes, just go find your first advantage. Stop looking for the trades. So this is what it does, guys. This reminds you that the large chart leads the way, and it keeps you focused on taking pictures on the large chart and taking 25 pictures each, and not just taking pictures, but explaining on the picture why the rule is met. So go take 25 pictures of strong triggers, and I think even more importantly, go take 25 pictures of weak triggers. And what's going to happen is that if you take the time, if you put those into your spreadsheet, and you take 25 pictures of strong triggers, and you take the time to write, and let's hope this is a good one. Strong triggers, rule number 1, momentum. The goal and the hope and almost the guarantee is that you're never going to confuse that strength for weakness, because you're going to have the same picture defining when anything can happen and rule number 1's not met. So I know it feels like work. Take the time to take those pictures. Do it for strong triggers, for weak triggers. Do it for a clear path. Do it for a termination condition. And let the recipe, let the words that describe the look resonate in your head, and that little neural connection, it will slow the market down. And remember that strong triggers and a clear path, that's your core, that's your foundation. So as you go through this, I'm not going to leave you to your own devices to try and figure it out. I'm also getting you the high probability trend trade checklist. This is in the zip file. And the zip file, guys, you can download that just in case you're not computer savvy. I'm definitely not. You can click the download button. It'll put it in your downloads folder. Or you can just click on it and drag it over and set it on your computer if you want. But this high probability trend trade checklist is designed to give you a checklist to put you in to the highest probability trend trade you could ever take. So it starts from a strong top or bottom, from a no triggers through termination that reverses the market, guys. And that strong top or bottom isn't mandatory for the high probability trend trade. It just sets you up for the best of the best. But that strong top or bottom, that termination condition that reverses the market, it is mandatory for the 50-50 trade for the brand new user. It is rule number 1 for some of the other trades that Nexgen teaches when you start using other time frames, different charts. So just know what it looks like. Remember the recipe for it. Your checklist is going to ask about odds favorable momentum, the separation between the small and large, making sure that the colors match, and really being positive that it's not that weakness, that it's not that anything can happen look. It's going to ask about the path. Do I have no termination conditions? Well, that's exactly what a termination condition looks like. That's always a termination condition, and it always has the potential to stop and create an untradeable bounce. This is only potential, not a high probability trend trade scenario. In order to take the high probability trend trade, you need a clear path. Smalls and large below the area, next area not reached, and then you have to be able to define your entry. And these pictures go all the way down to the point of where your limit order goes. And you can take these pictures and you can go through it and you can create that recognition through repetition. And then you can print out the second page and put it on your desktop. Police yourself. Every time you take a trade, police yourself as you go through the study. Using market replay, going back and replaying historically to take trades, hitting pause and making sure that your rules are met, guys, it's a great way to create recognition. And I can tell you that nobody in the history of this checklist has ever been able to answer yes to all four truthfully. I have to say truthfully, and do worse than 70%, which means at 70% winners, the only way you're not making money is if your management's horrible. And I'm going to give you a plan for that. So guys, print this second one out. I can tell you, I trade with a checklist on my desktop. I still do, 5.5 years in. And then I'm going to give you a plan. I had this conversation with somebody not too long ago, and I asked them, I said, hey, do you have a trading plan? And they said, well, no. I'm like, you don't have a set of rules to get you in and out? And no. And they were relying on their emotions and their in-the-moment judgments and their opinions. And so I did the Google searches, because that's what I do. When I'm curious about common themes with users, I'm like, well, let me just Google it and see what Google says. And every trading website that talked about becoming a trader said you must have a plan. And the common thread was there's no such thing as a mental plan. Have a written plan, guys. And have a plan that is repeatable. Have a plan that is testable. So this plan, the KISS plan, the Keep It Simple Sunshine plan for everybody but Bob, guys, this plan is a stepping stone in your learning journey. This plan is designed to optimize your chances of success with a high probability trend trade as you learn to read your indicators. It'll be through simulation, through study, through class feedback, through continuous practice. Guys, you will create your own plan if you choose to. You'll have the ability to create your own plan, and it'll be based on your ability to read the charts. Optimize your chances of success. This is the best of the best. Confidence comes from the memory of success. This creates the most confidence, guys. And there's two things that you have to know before you ever enter the market and you're not on simulator. And I put in there not on simulator because if you're on simulator, Todd, take 1,000,000 trades, F them all up, drop them in the room. Let's talk about what you saw, and eventually we'll get back to exactly where you need to be. Same with you, Badger, Aaron. All I need to see is what you're doing. But the idea is, when will you enter a trade? Guys, you'll enter a trade because the rules are met. I love it. Guys, abuse me. That's what the classroom's for. I will enter because my rules are met. Why? Because my rules are a description of a pattern. That's all they are. And that pattern has been proven to win more than it loses, which means that I've taken the time to go back and circle those tails, to recognize that pattern. I've taken 100 pictures of it, and 80 of them produced winners, guys. And I trust, I have verified, I believe that that pattern wins more than it loses. So there is no reason for me to not enter if that pattern is ever present, if my rules are true. And my rules help remove the emotions of trading. There's a gentleman, unfortunately he's no longer with us, Mark Douglas. And Mark Douglas used to talk about, he goes, if you had a coin and a coin flip, but one of the sides of the coin was weighted. So 80% of the time that coin landed on heads. And it was verifiable. You could flip it 100 times, 80 times it lands on heads. He asks during the seminar, he goes, would anybody bet on tails? Would anyone ever deviate from the plan that's been proven to win more than it loses? And of course, everybody says, oh no, there's no way I'd ever do it. But the reality is we're all human and we think we can beat that little 20% window, guys. Once you trust your patterns, you know that the next trade is coming and you're okay not being in the market. And then you have to know when to exit. And this is what makes you guys pucker. Exits are either taken at profit targets, predetermined key areas, whatever they may be, or when the advantages that had you enter the trade had gone away. So if I take a high probability trend trade, I take the perfect entry at the area inside of triggers, and the market goes 4 or 5 ticks beyond those triggers where it shouldn't, guys, I'll exit that trade and I'll take a loser. And anybody that tells you that they don't lose day trading is lying to you. Everybody takes losses. The key is that we don't take avoidable losses, that we don't take losses based on our opinions when the indicators aren't telling us that our pattern is true. If I enter a high probability trend trade and 3 divergences print, my advantage is gone. I choose to exit that trade. So management is where money is made. The entries will take most of you a week or two to be able to nail. Management is where fortunes are won and lost, guys. So define your entry. Great entries create manageable trades. Great entries reduce risk. Great entries maximize profit potential. And then you've got to do something with it. And the KISS plan management, I wrote this, gosh, it's been years. It's based on 2 contracts, and each contract has a role. The first contract, when you're in the market initially, is designed to help you understand and trust stop placement, knowing where to put your stops, where the market should not go. And that first contract is focused on getting you paid quickly, creating that confidence. Your second contract, that's the one that teaches you to trust your large chart because it holds for a little bigger target. So your KISS plan is 100% dependent on your ability to enter where the market is most likely to continue. So it's nothing more than if-then. This is a flow sheet, guys. It's a flow chart. If entry is 2 ticks below resistance inside of triggers, then the initial stop is 4 to 5 ticks beyond the triggers. This is where the market should not go. And guys, you'll know your risk before you ever enter a trade, which is kind of nice because you can choose to accept the risk or not. So if my entry is at 71.34, 2 ticks below resistance inside of triggers, well then my stop is at 71.49, and this is $150 per contract. And if you're not okay with $150 per contract, this isn't your trade. Because if you put a stop below an area inside of triggers, well, I'll just assume that the mid-band holds and I'll put my stop below resistance. You're likely to get stopped out and just watch the market go without you. If you put it in the retracement area inside of those synthetics, inside of the large, guys, you're likely to watch the market hit your stop and then drop. And it's like they have cameras behind you. So if this is your entry, this is your stop, and it's $150 per contract. Learn to accept it. You have to accept risk, and your targets are predefined at $100 and $200. If my stop isn't hit, it means that I'm getting one of these reversal bars. And if a reversal bar prints in the direction of my trade, I'm going to redefine where the market should not go. And I feel comfortable redefining where the market should not go because this reversal bar confirms that the market is going down with the odds favorable momentum, that the market is going down with that clear path, and that the market is going down from the area inside of favorable large triggers. It's a confirmation bar if the rules are met and the market moves in the direction of your trade. My new stop is 2 ticks above that reversal bar. And because of my amazing entry, I now have $30 risk per contract in this trade. It doesn't guarantee a winner. It doesn't mean they won't turn around and hit my stop, but it means that if they do, that's a tiny little loss. And if they don't, it means that they went to my first target. So if price reaches your first target, 1 contract of the 2 is automatically removed, and those funds go into your account, guys. And that is success. You're a winner. You're happy. Your sweaty palms are drying up. Your pulse isn't racing. And with 1 contract remaining, you're going to move your stop to break even. And I'll tell you right now, break even isn't always the best stop, but break even is the confidence builder. Break even is what's going to help you learn to trust the large chart, because with money in the bank and absolutely no risk, it makes it easier to remember that the only reason you took this trade in the first place is because the large chart is screaming south with absolutely nothing in the way, and it's more likely, the odds are favorable that it'll continue down rather than bounce back up. And if they don't come get you at break even, well, that means that your second target was reached, that $200 target, which means that over the course of 3 to 4 minutes, you just made $300. And guys, that's not a $300 day, that's a $300 moment. That's a $300 trade. But if that $300 was the best you could do each and every day, that's a $75,000 year. Find a way to add $100 and you're at 6 figures. And this is the part that I can't stress enough. New users hate to get out of trades because what if there's more money? New users hate to get out of trades when advantages are gone because what if the market goes even though it says it's not? I'm going to encourage you guys. Give me 30 days on the KISS plan. Give me 30 days of defining the perfect entry. Give me 30 days of the very mechanical management plan. And what you'll find is not only do you have the potential to be consistently profitable more often than not, you're going to be seeing things outside of this trade, things that'll set you up for the second trade, the 50-50. The one where it's not a clear path, that must come from a strong bottom, that has to have momentum on both charts, and that can't have divergence, guys. Because once you can take these two, you can find the rest of them. And if you're making daily profits consistently, that's the goal. It's not about one day. It's not about one trade. It's about doing the same thing each and every day. That same thing because it's been proven to win more than it loses. That same thing because it optimizes the chances of success. That same thing that says don't trade into Fibonacci support, especially with weak triggers, especially against 3 divergences. That's an area that's likely to stop the market. Are there any questions? Because we're going to get into chart reading. We're going to move on and we're going to go and we're going to start just clicking on everybody's charts and see what you're doing and see how you're doing it and see if there's anything I can do to help you do it better. So let me find the beginning of the day. Dun, dun, dun. Pete got us going this morning. And guys, I'm going to tell you right now, you know what? Before we get into charts, I'm going to share this one with you. Sorry. I think this is important as we go into the second hour. And this is for all of my new folks that are going to feel compelled to be the trade police, because I know I did too. Guys, the key to everything is having a foundation. Understand the basics. And then compound a little bit. Get a little bit better every day. There's this really cool Japanese philosophy called Kaizen. And it's focused on incremental success rather than being all the way there in the first day. And it gives you a little bit of leeway to just grow. So for you new users, I blanket with very conservative rules and the recognition of advantages, and I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. And for new users, all terminations are bad and no momentum is bad and areas beyond large triggers are bad. And these are blanket rules because they increase the likelihood of success. They increase the trust. They increase the ability to read your indicators. They're not always bad, and that's one of the things that you'll see as we get into the second hour. You'll notice that people are taking trades, maybe not at the pullbacks inside of favorable large triggers, or maybe they didn't have a clear path or the momentum wasn't the strongest. But the more time you spend with the software, guys, you'll begin to see these things. You'll understand when exceptions can be made or when not exceptions, but rather trade plans can be modified. Trade plans are a living document. And the smarter you get and the more you see, you don't break your rules knowingly. What you do is you modify your plan to make that one of your entry rules. So learn the process that yields results. My favorite phrase in all of trading. Learn the process that yields results. Learn the pattern that produces results, and the results seem to follow. And this is where the KISS plan comes in. If you keep it that basic, if you follow simple rules and you're okay not looking for all the trades, but rather just the best trades, you can find an extraordinary level of success. And I've watched it. Over the last 5.5 years, I've been teaching people to read indicators. The further new users deviate from simple, the longer they tend to take to be comfortable with pattern recognition. So question everything. I encourage it. I want you to learn, but I also want you guys to give yourself a little bit of grace. I want you to be okay with the fact that you're new, and I want you to be okay with the idea that you're a little confused, and I want you to seek clarity in everything. So as we go through and we look at these charts, every chart that I go through, I'm going to go back to momentum, path, and entry, and we're going to talk about it. And Pete does a good job telling me what he sees and what he did. So he says, woke up to this for the first trade of the day. Strong top because the termination reversed the market. The triggers rolled. They're wide and separated. Odds favorable momentum. Several terms in the way. Line after line after line. So this is Pete's large chart read. This is what he's looking at. These are the advantages that he sees. And these are the challenges that he recognizes, knowing that he may need to manage assertively. And you'll notice that Pete doesn't trade into the first line, and he doesn't trade into the second line, but rather he lets those lines break. He lets price get below the trouble with that momentum, and he finds a way to enter the market and take it down to the next area. And guys, this is brilliant. This is Pete believing that the next trade is coming, that he doesn't have to be in every move, and he waits until he has the highest chance of success. And he missed his pullback to the mid-band in the fibs. So he gets in, he goes, I'll just catch the second half of the trend trade. And absolutely, perfect, great trading. Based on a large chart read, using the small chart to define an entry. Really well done, Pete. And then Joel says, check it out, Mark. Well, it kind of is a strong bottom because they came back and retested it. It reverses the market. The momentum is strong. There's nothing in the way, and it pulls right back to support inside of favorable large triggers. And guys, I believe this is one that we posted in the room that we did together. And notice, look at this. He's marked yes to each and everything on that chart. And sure enough, that's the pattern that's bringing them success. And that's exactly what we're looking for. And if you have Snagit, instead of just the free capture software, you can post your checklist on a chart, guys. You can learn to police yourself. And even though it doesn't look like Joel took an entry here, Joel still went through the process. This is what I'm looking for. This is where I'm looking for it. This is what it looks like. This is where my entry would be. Outstanding, Joel. And then, we answered Lonnie's question. Marky Mark. How are you trading these charts, Mark? I'm glad you made money. So guys, let's talk about this. And Marky Mark, forgive me if it feels like I'm putting you on the spot. What made you decide to enter this trade? You don't have any indicators on that chart. You don't have anything showing large or small gauging momentum. You don't have one area on that chart, but you made 40 bucks. How are you going to repeat that? How are you going to repeat that success? What are you going to tell yourself, right? You have to right click. You got to reload that data. Marky Mark, I love that you won. I love that you put $40 in the kitty there, but man, you're never going to be able to repeat that because there's nothing to repeat. There's nothing to see. Remember, guys, day trading is seeing something and finding a way to do it over and over. And Lance says, check it out. No such thing as a strong trend, but you can have strong triggers. Actually, there is a strong trend. You have strong triggers. You have smalls above the large are wide. The space is there. You have room to fibs. And you have strong triggers here as well. And guys, this is nothing more than a jumping in with momentum. This is everything says up strong, and Lance says, well, with everything up strong, I'm going to go up with it. And when I hit something bouncy, I'm going to take an exit. A nice recovery. You missed the exit on the first one, you get it on the second one. Guys, this is a great trade. This is based on momentum and path. And there is no pullback to areas inside of triggers. There just wasn't time for it, not with this level of momentum. Lance, this is an awesome trade. And this is a trade that we call the chili dog. This trade was actually invented by a gentleman in this room. He's not here today. Guy named Ron. And Ron came to us a couple years ago, having never traded. And he went through the high probability trend trade, and he learned momentum, and he learned path. And he just decided for himself, he goes, God, I hate waiting for pullbacks. He goes, what I've noticed is that every time the market is absolutely railing with strong triggers and there's nothing to create a bounce, I can jump in and out, make a couple $100 at a time. And guys, it's a beautiful trade, and it's based off those core ideas of momentum and path. All right, let's see who's next. Marky Mark. Same trade. So Marky Mark, are you in here with me? So guys, if you ever wake up Monday morning and your charts look crazy, they're like, oh my gosh, I don't have indicators, there's nothing there. It's something with NinjaTrader. I want you to go to your charts and right click. And if you reload all historical data, very often it fixes that. That's the easy fix for it, Marky Mark. The longer, more drawn out fix, if you just aren't comfortable doing that, is to come over to tech and drop a ticket into technical support. And guys, Jason is our tech guy. So this is especially for you new users. Jason is phenomenal. The only things Jason is incapable of fixing are things that aren't truthfully broken. Reloading historical data pretty much fixes that one right from the get-go. But if you ever have a challenge with your software, if you have something doesn't look right, doesn't feel right, you think you're missing fibs, you can't get it to load, go to Jason, guys. Let Jason fix it. You can always ask in the room. I'll give you the extent of my technical expertise, which is very, very limited. Or just go to Jason, and Jason will get you squared away, and he'll get you squared away quickly. Most things that take me 20 or 30 minutes to figure out, Jason figures out in a matter of seconds. Strong triggers. All right, so Lance, wrong entry, but worked. Entered at fib, best entry at the midband. So the one thing, Lance, you don't have a clear path yet. And let me show you what I mean. Did you notice that all the triggers are above the area? So it's not clear yet, Lance. Just if we're going back to the very basis. Does that make sense? But let's celebrate. So one of the cool things is you have a strong top. And when you have a strong top, it means that the decisions made by the sellers at that key area were so impactful that they reversed the market. And it means that they were so impactful that they created momentum. And this look says you're more likely to go down. You took what is essentially a momentum trade. All the momentum, and you're saying with all this momentum, I'm hoping it breaks, I hope it goes down. You get in right at the fib, which is perfect. I think the fib is a good entry. Mid-band's fine too. Either one right in this area. And all you're doing is you're riding that momentum down. And Lance, you've really latched onto this trade. You're doing a great job with it. Because a market with this level of momentum, especially from a strong top, it's difficult to stop. And you're really doing an awesome job of capitalizing on that momentum. Very nice. Whoops. So the ones we just saw. Pete does the same thing. There's your strong top. There's your odds favorable momentum. He takes that jump in trade. It does go back to the mid band. But just like you, Lance, with this level of momentum from a strong top, he knows that it's more likely to go down than up. And he just rides that wave down. Could have waited for the pullback to the mid band, absolutely. But there's nothing wrong with either of your entries. You just know that you have to keep a little extra risk on it. And sure enough, easy peasy, right to the fib. And when it starts to come up at that fib, Pete says, I'm in this to get paid. My goal is to get paid. My goal isn't to look smart, isn't to hope that areas break. My goal is to get in, to get out, to make money, and call it a day. Marky Mark, again, if you have a tech question in the room, guys, don't just post your link. Because I see the link, just so you know where my head's at. And I think, Marky Mark's trading. He's taking trades. He's doing great. He's going rock star on it. And I see you guys post these. So if you post in the room, tech question or I need help, then I'll get you that help, I promise. Oh, sorry. Momentum. Directly into a termination condition. And it worked out. Just jumped in after it cleared trouble, but it didn't clear trouble, Pete. See, you opened up a can of worms here. You traded directly into a divergence low that the triggers hadn't broken. You traded directly into a divergence low, right at a divergence low that none of the triggers are broken. And you managed to get paid. And guys, this would be one of those times where I say, hey, it's less likely to work than it isn't. But again, Pete, banking on momentum. Guys, momentum is rule number one for a reason. And when I said that it would cover mistakes or create exceptions, this is what happens when you learn to read your indicators. You start saying, everything is screaming, the market's going down, every indicator on both charts agree with the rules or agree with the trade. This market's more likely to go down than up, and Pete capitalizes. And this is where you new users are headed. But until you get that best of the best, until you find that consistency initially, sometimes it's just safer to relax and wait and let it come to you. And then Pete, you say, damn, missed this entry because I was annotating. Yes, it wasn't my money. And that happens sometimes, huh? You were annotating the trade into the termination condition and you missed the one with the clear path. It's funny how life works sometimes, guys. Pete, I'm not worried about you. You're not suffering, my friend. Guys, once you figure out your way, it's pretty awesome. Once you trust your plan, it's pretty awesome. Because you really will. You will begin to anticipate your trades. You'll begin to call your shots. You'll begin to understand expectations. So Jen, smalls almost outside of the large. Smalls almost outside of the large. Pretty much inside. Can't be a momentum trade if you don't have momentum. And then it pulls back. Momentum trade, yes, sell with a loss of momentum on small, but with all the momentum on the large you held. So with the clear path and everything saying down, you said it's likely to turn into a trend trade, and it did, and you made money. Thank goodness that area on the wrong side of the trigger stopped the market, right? Thank goodness weak triggers didn't create a retracement all the way up to the mid-band. Thank goodness losses of momentum here didn't push us all the way up to these fibs. I love that that worked out for you. I would have been nervous too. I'm glad you got paid, Jim. I'm always happy when you guys get paid. I want you to get paid every day. Cav, market moving to the upside. Yep. What does that mean? That means I'll trade directly into a termination conditions. Means I'll trade directly into a fib with absolutely no triggers through it, with two divergences having printed, without momentum, and hope that it goes up, and it did. That's awesome. I'm glad that it went up for you there. 3 divergences from a low is nice. That's a big termination condition. Smalls outside of the large is nice. That's a lot of momentum that's hard to stop. Every indicator on this chart going up, that's nice. That's difficult. It's difficult to slow down a market that's doing that. If you wrote out a plan that said, it's green, I'll just go into terminations, that's not a very good plan, right? Holding through another divergence with weakening triggers, right? And then choosing to get out up here with weakness. I love the exit. Weak triggers right at a fib. What a great exit condition. Ballsy hold, Cav. Nice job. Why I took these trades. A short story by Bob B. the Man. I love this annotation. Started with a strong top. Termination condition. Didn't reverse the market yet. So that's not a 50-50, Bob. That's directly in determination conditions, 100%. Large triggers are up. Small triggers haven't even gotten below them. But because of the strong top, that little snapback, the way you caught it, is a perfect trade. It's just not a 50-50 trade. It would be what we consider an edge trade, Bob. And you may recognize that trade because Nexgen started teaching it in 2004. When a Fibonacci area holds, sell the pullback to the small triggers. You did it expertly. And then everything says down. There's your entry. It's a momentum style entry right at those large triggers, right at the small. Down it goes and you get paid. And then it turns into a trend trade and you take your entry and you get paid. And it pulls back to the mid band again and you enter another contract and you get paid. And they still haven't reached the termination condition. And when it pulls back, you enter that contract back again. And then it hits the fib. And it hits the fib at 02. And your large chart says, Bob, this is a 50-50. I know it looks like a termination condition here, but the smalls are through. Price hasn't reached the next area. The large are coming. The momentum is strong. And Bob says, I know this look. I'm going to take that trade again and take it to the one that is a termination condition. And holy smokes. $1,600 total profit in one move. The move started just before 3 a.m. and you just played with it all the way until 4:40. In the entire time, and this is what I want you new users to see, the entire time, Bob had odds favorable momentum. The entire time, he at least had the potential to break areas. And he knows that you don't have to hold from here to here. Get paid, find another entry. Get paid, find another entry. Get paid, find another entry. Get paid. And you'll notice that all three of his contracts come off right at Fibonacci support and the triggers hadn't broken. Bob, this is outstanding trading. I don't even want to look at your next chart. How do you top that? Weak top, not a 50-50, Bob. Momentum trade, big difference. Not a 50-50. So you have a weak top, you have every trigger above the fib. You do have odds favorable momentum. Price cleared trouble on the small chart. So you've made up a rule, and it's only a rules-based entry area, Bob, if the rules are met. Does that make sense? You can't call it a rules-based entry because it's a mid-band. A rules-based entry means that it's a mid-band inside of favorable large triggers with momentum and a clear path. What you have is a momentum trade, very much. And you did it well. But this is kind of like, this is the same one Lance took, I think. What you're trading is the potential for this area to at least produce a 50-50 or break based on the momentum on both charts. And it's the little snapback to the fib. That's your entry for the potential. And if you get a couple bars against you, it's an exit, right? But you never did because momentum won. I love the trade. I'm focusing on the language a little bit, Bob, because one of the things, and this is a great segue to a lesson, naming the trades you're in. And I'm going to show you why. Let me find it real quick. Well, and let me tell you why. It's not because I'm a language nerd. I am, but when I name my trade, it means that I know the exact rules to enter, which means that I know the advantages that are in place for me to enter that trade. And if I know the advantages that are in place, well, then I can recognize when those advantages are gone. And that's how I manage, is because my advantages are gone. So if I'm in a high probability trend trade and everything is perfect, as a brand new user, I may use the KISS plans, or I may develop. But because I know what my advantages are, I can identify when they're gone. And if I'm in one of those 50-50 trades, I know that my advantages are different, that there's not as many, and I may manage assertively. And if I'm in a momentum trade, I know that the reasons I'm getting in aren't the same as a trend trade, right? And I have to manage them differently. So Bob, I'm not beating up your trade. It's absolutely gorgeous. But that little bit of language, understanding what it took to get me in, it's going to help you guys, and it really will. It'll help a lot as you learn how to exit trades, as you learn why to exit trades. Great trading, Bob. $1,100 is a pretty good morning, or $2,100, excuse me, is a pretty good morning. And then Andy says, look at this nonsense. I don't even know what size chart this is, but look how they're caught in between divergences and fibs. And there's just nothing to do. There's no up, there's no down. There's just sideways. There's just go make a sandwich. And then Cav. Triggers are strong. You don't trade into the area and you take that chili dog. And that's pretty. Cav, it's easier when you get in on the other side of fibs. Nicely done. Nicely done. And guys, I regretfully have to tell you, that's all the pictures. Nope, there's one more. Get in on the other side of the trouble and make money. Let's line it up. 48. Oh, 93. 98. Sorry. It's a tiny little number. So you're right about here. With all that momentum, so you're trading up into 98.50, 98.50. So you were giving yourself room to the one-to-ones, giving yourself room to the fib. Way to capitalize. Nice one, Cav. Okay, Marky Mark, I've addressed it 3 times. Are you listening this time? I got you, brother. So do me a favor, Marky Mark, if you post that picture, write something like tech help or my charts are screwy. Something that lets me know that you're not putting a trade that needs to wait for the second half of class, because we could have fixed that like instantly. If your charts ever look like this, and very often they're going to look like this on a Monday morning, I don't know what it is with NinjaTrader and the data over the weekend. All you have to do, Marky Mark, see, perfect. Right click, go to reload all historical data. And what happens is when you do that, it just it takes a look back and it recalculates and it'll fix most mistakes that are on that chart like that. All right, Joel, I'm going to challenge you. We're about 2 weeks in. I'm going to challenge you to start posting the ones that you need feedback on. Let me know if that works, Marky Mark. Because, Joel, we know that when you have momentum and a clear path, you tend to win, right? So everything says up. Every trigger is above fibs, and you went short, and I can't for the life of me figure out why, because I can't see this chart over here. So this one, I would be very curious. You don't have a termination. Your smalls are outside of the large. Everything, awesome, Marky Mark. Everything is above the fib, and you chose to go short. I'd be curious why. But then with odds favorable momentum and the potential to break, that reversal bar, that close coming off the area with this large chart look is perfect, and you take it down to trouble. Big difference in the look. Maybe that other one will come in. Maybe you'll have it. These are the ones I want to talk about all day long. Odds favorable momentum and clear path, and you find an easy winner. Odds favorable momentum, clear path, and you find an easy winner. This is your recipe. And new users, I want you to see this. This is the easy trade. This is the one that Joel knows wins 70 to 80% of the time. Joel, how often, did I miss that one? How often do you suppose odds favorable, momentum, and everything up? How often do you suppose a short trade works with that look? Not coming from an area. That's part of the plan building, is when you start going through and looking at these. With the termination condition, it makes sense. That's when taking a shot against those triggers, because your small chart is showing you that change. Does that make sense, Joel? One of them is just financial suicide. The other one, you have at least a fighting chance. But when everything says up and there's nothing in the way, man, you just find a way to make money. Day in and day out. You were bored, but look at what happened here. You said you were bored, but you had a divergence. You're coming from a strong bottom. Every indicator is up. Every indicator is up. You've given yourself a fighting chance. And then you didn't believe it, so you tightened your stop. I'm not sure why. And then you get back in with very little room to your target. Would have been easier just to hold, right? I like it. You're protecting. So again, Joel, your most popular word that should say trade avoidance. Have you noticed that every time you take a trade that you know you shouldn't take, you don't have any problem resorting to that word. You don't have any problem going to hope. I think this is one of the reasons annotations are so important. Because go back to your losers and talk about hope, right? I hope weakness into a pivot stop out works out. I'm confident with odds favorable, momentum, and nothing in the way, I can find a winner. Joel, your trading is awesome. I'm confident with odds favorable, momentum, and nothing in the way, I can find a winner. I'm confident with odds favorable, momentum, and nothing in the way, I can find a winner. I hope it wins when I fight. I love it. And guys, I've had the privilege of helping Joel recognize the things that are really helping him with success, and helping Joel recognize the ones that tend to lose more than they win. And that's what I do each and every day. But Joel has taken the feedback. Joel has taken the pictures. Joel is putting the reps in. And I would say he's building a pretty outstanding trading plan. And one of the biggest questions that I ask you guys to ask yourself, and I'm going to do it right here. Uh-oh. Sorry. All right. Do I need to fight triggers and trend to find success in the markets? And guys, I'm like your grandmother. I like to protect you a little bit. And Joel, this is the question that I want you to ask yourself. Do you need to fight strong triggers to be able to make money in the markets? Do you need to fight the trend to find success in the markets? And no is the answer. Obviously, rhetorical question. So how do you get to a point where you stop doing this, right? How do you get to a point where you stop taking the hope trades, the maybe trades, the I wish trades? My father-in-law used to say, wish in one hand, poop in the other. Tell me which fills up first. You have, Joel, one of the greatest plans. Terminations, find the opportunity, odds favorable, keep going. So now that you've identified what's good, now that you've identified what's bringing you success, it's just rinse and repeat, guys. Just because you start to get good at it in a week, don't stop focusing on it. Don't stop looking for the best trades. And most importantly, guys, don't break your rules. Don't break your rules hoping things do stuff that the indicators say they don't, right? Directly in determination conditions, from a weak top, you've already had 2 divergences, and I get it. I get that you're selling it on the way down, and you're hoping all of this trouble in the way breaks. Simulator, guys, creates a testicular fortitude. Cav, I've seen your live trades. They don't look anything like these, typically. Remember, practice like you want to play. If you go to the driving range and you grunt out of your shoes and you hit one great 350-yard drive, the likelihood of you doing that on the course is 0, right? You're going to slice it into. Right on. So you're trying something. Trigger strong from the pivot. Okay, so you have momentum, right? So you're saying with momentum, you're not gonna pay attention to these right now. Fair enough, which is cool because you're working on something. But I always encourage you guys, if you're trading outside of your plan, let me know. I'll help. Instead of going, dude, Cav, why do you keep trading in determination conditions? So market pivots, divergence is created. Place the sell as the market's coming down. So as you're working on something, the pivot's at 30.75. Your entry is at 18. So you've got a 12-point differential here, right? There's got to be a better way. So let's think, right? Okay. Divergence is one of my entry rules. Where is divergence true? Divergence is true 2.5 bars down. I'm trading in determination conditions anyway. If divergence is true, I take my entry. Does that make sense? And then you have a place for your stop. And if that area is going to hold, it's going to be over quick. And if it doesn't, you've got more money to make. Because by the next entry after that divergence, you're right into the next areas. I love building plans, guys. I love looking at patterns and recognizing things. And one of the things you can do, Cav, is if you're not paying attention to the large chart termination conditions, but only relying on that momentum, I've done this before, and it makes it easier to take trades like that, is you can actually go through, because large chart momentum seems to be the only large chart rule, put the trigger lines on there. And just the trigger lines, and don't distract yourself. So now you're looking at it and you're saying, all right, with odds favorable momentum, I want to see a divergence down on my small chart. And if I get a divergence down on my small chart, I'm going to crank that sell button down. And I'm going to take that trade. Does that make sense? One of the things that I encourage you guys to do as you work through something new is focus on the most important things, right? Focus on what's bringing you the success, the part that's going to be the rules. And what you'll find is the study process goes a lot quicker. And then one of the other things I have for you, Cav, and I'm going to drop this in the room for you right now, and this is for everybody. Where is it? So this is the KISS trading plan. But Cav, what this will do for you as you begin to develop this new trade, and guys, this is cool. This is what happens when you learn to read your software. So you can create your plan outside of the simple plan. So first, define your entry, right? So you're going to say odds favorable momentum large chart, and that's your must-have. Whoops. And then you're going to say, what are we going to say? We're going to say small chart, divergence, with trade direction. And you're going to say sell or buy now after divergence true. And there's your entry. And now you've got to go test it. Now you've got to go back and you've got to find those rules met. and find your entries and go take 50 pictures of it. And the cool thing is you can do all of this without ever having to enter the market. You can do all this without ever having to risk a trade. So let's just go see. And I know that you're looking at, I might study this. There's the divergence continuation. I have odds favorable momentum. There's my lower divergence. There's my sell. And now I can start planning, well, how do I manage it? But that's your look, dude, 100%. Now you can take 50 pictures and commit that look to memory. And as you scroll back with odds favorable, wow. I love stuff like this. Oh, I just saw one. I don't know where it went. That one was too soon. That one wasn't odds favorable. And you can tell by the synthetics. So there's that down bar. 2202. What did it look like? Oh, didn't have momentum. I know that's not part of it. Does that make sense, Gav? This is how plans are built. Not quite momentum. Didn't have divergence. So you can go through and really make it consistent. You're welcome. And that's for everybody. Cav's so good at this. Cav, you know you're good at this. But remember, there's no such thing as a mental plan. And I think that's probably one of my new favorite phrases. There's no such thing as a mental plan. There's no such thing as believing you understand the exact rules and the exact management in your head. Make them concrete. Make them repeatable. Make them testable. And prove to yourself that your written plan wins more than it loses. And that's what tends to bring the success. So odds favorable, momentum, and potential to break. There was your pullback to resistance inside of triggers, and it's currently working its way down with all that momentum. Smalls are up, larger down. Well, that's not momentum. Look at that. 3 divergences in the same price range. That's a termination condition. And this is one of those, hey, there's just nothing to do. And then for you new users, I want you to see this because I'm not the least bit afraid to show this. Because anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. So how many new users do we have left? Slipboy and Aaron and Todd, I want you to see this. You had strong triggers. Rule 1 is met. You had a clear path. Rule 2 is met. The large chart was absolutely perfect. Can you guys give me a Y if you see that? Right here, right where that circle is. Man, that is everything that I look for to go find an entry. And then I had a pullback. And guys, this is the best lesson you'll ever get. I had a pullback to resistance inside of triggers. And this is a high probability trend trade, guys. This is the best of the best. This is a trade that typically wins 70 to 80% of the time, but 20 to 30% of the time, I will lose. And this is part of that 20 to 30%. But if you go through the rigmarole of defining your advantages, of seeing that without question, without hesitation, 100%, this fits the bill, what happens is you start saying clever stuff like, oh man, good for the small crowd. They got me this time. That doesn't happen often, but oh, they had my number. And suddenly losses aren't that big of a deal. And your loss is relatively minimal. It's not a huge loss. It's just a trade that didn't work. And that's just part of it. But what you'll find is that more often than not, you're going to find trades. You're going to find the trades that do work. And what does that circle look like? There's a great example of a $300 trade. Guys, I'll lose $100 all day long if I'm making 300 on most of them. And now it's a termination. And now you have to sit still for a minute. So I'm going to take 5 minutes. That's all the pictures. Joel, I was not trying to dissuade you from posting in the room. I hope you know that. I just believe that now you're at the point in your plan building where we should talk about the ones that aren't perfect, right? And what does your plan say, and what do your rules say? And guys, this is such a big thing. And when we talk about the plan, and where was that one that we were looking at? You didn't annotate this one at all. In this one you annotated, right? And triggers hit termination and haven't crossed. Is not crossing triggers one of your rules? Let's go for a little annotation change. Take care, Alexandra. Good to see you in here. Price reaches resistance. Triggers below. Term may stop the market. So there's your large chart read, right? So for this trade, what kind of trade is this? This is a counter trend trade. So that has to happen first. That's what makes it repeatable. Does that make sense? Because that's the exact same look without the termination. Still waiting for the live account to be approved? Goodness. And then there's the exact same look with a termination. So you got to know the difference so you don't get talked into this one without the term. And then what happens here? I would say small chart needs term. Small's below large. How do you get in on this one? Right? How do you get in on this trade? Joel, that reversal bar gives you room to get to that fib. That reversal bar gives you a place for your stop, but it seems a little aggressive, right? Here you have the large still up, but the smalls are down, but here you still have odds favorable momentum. There's not a sign yet that it's going. Your easier trade is going to come from somewhere over here. But, whoops, there's that Nexgen edge trade. 13.2 fib holds. Sell the pullback to the small triggers. Good looking entry, right? And it's preceded by a termination condition on the large chart. So if I'm making a checklist, I say large chart term, small chart, smalls roll from term, sell pullback to small triggers. And then you have a much lower risk trade. Does that make sense, Joel? So the ones that aren't perfect, the ones that aren't odds favorable, the ones that aren't clear path, those are the ones that you want to create some definitions for. Because remember, you're building a plan, and you're building a plan that's going to set you up to make it repeatable. This is an awesome trade. Let your annotations reveal why it was an awesome trade, why it's repeatable, how you do it. I love building plans with you guys. It's a lot of fun. I'm going to take a few minutes, guys, and when I come back, it's open season. Anything you want to talk about, let me know. Anything you want to show me, show me. If there's a trade you're working on, if there's a plan you're building, if there's a challenge you're having, the only way I know to help you is if you ask for help. So use your voice. I'll see you guys in just a couple minutes. right, y'all. Let's get into that last hour. I love the last hour. I'm going to be excited to share some stuff too that John Novak and I have been working on. First, we'll check out the charts that you guys have posted. Andy, strong top. Absolutely. Odds favorable. Absolutely. All the triggers below. You take a pullback. And just easy money, right? Easy money. Nice job, Andy. Algo. What am I looking at? This is neat. Tom, sorry. What am I looking at, Tom? There it is. So you had momentum and the potential to break. And you went short. And it looks like you got paid. So really the only feedback I can give is with all that momentum it goes down, huh? I don't know what's happening here. I don't know what those are. But those created a bounce twice. Small triggers are up. What time frame are we looking at here? Is this like a 21 maybe? That's a 13-2? And that's a 5-1? I got you. Did you mean to not have synthetic triggers? Well, that's what I said. So that's a 21, which is odds favorable. This is a 13-2, which is a pullback to what looks like a fib in a mid-band. Right at where large triggers would be if you had synthetics. Are you trading that bigger time frame, that 21-13-2 combo? I like it. Cool. One of the things you can do, and then I love this trade. Now that I know what I'm looking at, I love this trade. Momentum, potential to break, pull back to the area inside. No tick replay on either of them. One of the things you could do, if you chose to, and you don't have to, if you wanted those synthetics, you could actually put on your 13-2, under templates, it's a NASDAQ futures, 13-2 dynamic Renko bar. It'll put those synthetics on there for you. But they'll be from a 34, not a 21. So never mind, that probably wouldn't be helpful for you. But odds favorable, potential to break, pull back to the areas. And one of the things, there we go, cool. Large triggers, and that's exactly where it pulls back to. And even though you don't have the synthetics, you can still do that little lineup and know that these are the areas inside of it. Nicely done. Interesting looking charts. I like it when you guys show me different looks. But the rules are the same. Whether it's a gray background or whether it's a red background, right? Momentum is always momentum. Pullbacks are always pullbacks. Areas inside of those triggers are always areas inside of those triggers. It's a great recipe, Tom. These are pretty. Little mountain ranges, reflection in the water. I like it. I always think it's cool. You guys have different ways of doing things. And man, if you go to the other trading room, you'll see people with charts. There's charts I can't even read. There's a guy over there, I couldn't tell you what he's doing, but he does the same thing every day and finds a lot of success with it, which is pretty cool. Another pretty cool thing is what Nexgen is up to. For those of you that have been with us long enough, you know that there's a funding company opening up. Same values that we've had forever, customer service being a primary approach, and trying to teach people to day trade and build winners. And one of the things is it's working with a brokerage group called AMP, who John has had a relationship with for the last 25, 30 years. And AMP uses TradingView. And TradingView is a browser-based version if you guys are familiar with it. And John Novak and I have been working over the weekend and really for the last couple months developing a trading plan. He's created the indicators, everything but fibs. We can't do fibs or dynamic Renko bars. But we're developing plans that use a 1-minute chart and the areas and a 15-minute chart and the triggers and some supply and demand zones. And we're coming up with a plan because if you want to use the funding company, unfortunately, I think Kraken may have bought Ninja. Hamid, the same way you would. We're developing a plan, and it's probably going to work its way into education. It just depends on the market. Yeah, it's a 1 minute and a 15-minute. Don't fight triggers. Use areas. It's everything that we teach in Nexgen. It's just a little different look. Let me see if I can find it. Hold on. It's a trend trade at a mid-band, Hamid. It's an HVA trade from terminations, and then it's kind of a momentum trade. And we've got rules and checklists for everything, and we're going to go through, and the education is going to be available as we move forward. And what we're trying to do as well is we're creating a trading plan that allows Nexgen users that are comfortable with NinjaTrader, that have been using NinjaTrader, using the same methodology. I mean, you can, Bob, but momentum and path is always momentum and path. So I don't want you people on demo or new to worry about this. Everything that we teach is still, NinjaTrader's not going anywhere at all. And momentum and path, you're going to find your entry, right? And then I trade NinjaTrader, and then I also use these supply and demand zones for profit targets, identifying trouble. The same way I use the NinjaTrader ones, these 1-to-1s, weak triggers, great reason for an exit. Strong triggers, breaking areas, letting the roll run, letting your runners run. So we haven't figured out exactly how to work it into the education room. To be honest with you, I don't want to confuse anybody. There are differences, Joel, because TradingView doesn't have. Andy, I'm not that smart, man. I hate to let you in on the secret. You know what I'm good at though, Andy? I'm good at patterns. I'm very good at patterns. I'm very right-brained. Which I think is almost more beneficial. I recognize that I don't have momentum. I see that I don't have areas outside of triggers, and I'm just comfortable doing nothing. You're not, Andy. So what we're going to do, guys, is, and let me show you. Does everybody see the small triggers below the large triggers here? The same way it looks on NinjaTrader. There's your small triggers. There's your large triggers. Let's take a picture. Small triggers below the large triggers. It's momentum, right? Can you guys give me a Y if you see it? It's TradingView, but it's momentum. Smalls are below the yellow 1-to-1s. Large are above the yellow 1-to-1s. Does everybody recognize this as a 50-50 trade? It's not nearly as different once you get over the sticker shock of seeing it. Price reached a zone, which is very similar to a fib. None of the triggers were able to break. No more long trades. Pretty cool, right? And then look, with this one bar going down with momentum and the potential to break, your small chart is going to set you up for opportunities. It can't be done, Joel. Haven't been able to figure out a way to produce them, to replicate. So we had to find another way. John Novak and I have been working on this for about 7 months now. Using TradingView, coming through, creating an alternative, creating something that's going to be accessible to you guys with the funding firm. And I'll tell you what, I love it. I absolutely love it. And he even did research over the weekend and found a free version of the supply and demand zones. And if you guys remember when Janesh and Safia teaching the ale class, they teach supply and demand. And that's one of the concepts that we're using, because since we can't get Fibonacci onto the trading view, we can get that same idea, that same basic concept. We can do one-to-ones. We have both large and small swing one-to-ones. So it's, and again, I apologize if this is premature, but it's very much what you're used to. It is momentum. It is direction. It is recognizing problems and choosing not to trade into them. And it's patience, the exact same way. And finding the pattern that repeats itself. And if you look over here at 10 a.m., everything says down on the large chart. And this pulls right back to a mid-band, closes below the triggers, and the market continues down for a little bit. And it's just a different platform. TradingView has about 50 million users, I think, is what they said. And because our goal is to reach as many of them as possible, we're creating proven methodology. We're creating the same things that we've been teaching for 30 years, and we're finding a way to teach them on an alternate platform. So that was a soft intro, guys. I think it's important that you guys know that if you want to use the funding company, a little bit of change is necessary. But here's the great thing, and the most important thing to understand, is that you all have NinjaTrader, which means that you all have fibs, which means that you all have these awesome, proven, time-tested rules, and you're very capable. And you have everything you need to be successful. Strong top, lower divergence. So here we go. Fibonacci holds, pulls back to the small triggers. Steve, you try to take it as a momentum trade, but it just turns into a trend trade, so you add on and take it down. This is awesome. So guys, this is, and I don't know why you have synthetics on your 13-2, but this is the termination, the second of divergence. The small triggers have rolled and they're getting below, and you just find a way on the small chart to capitalize. It's not a high probability trend trade. It lacks that odds favorable momentum. You definitely have a clear path, and your small chart agrees, and it's really well done. And it gets to the bottom of those triggers that could create a bounce, and what a great looking exit. Nice job, Steve. Little unorthodox with the synthetics and stuff on the 13-2. John and I were having this talk earlier. Guys, I believe less is more. I really do. I believe the fewest amount of indicators for me creates the highest advantage. Just what my brain is good at. What becomes easy to recognize. With momentum and potential to break, that's the easiest look ever for me. Right? That's the easiest look ever for me. I know I had the termination, and I know everything is down, and I know my momentum is strong, and I know there's an area inside of triggers. And it's only three things, three moving parts. I just have to figure out how to wait for it to happen, how to ignore the market when it's not happening, and I've got to learn these patterns so they become easy. Hey, good morning, James. Nice to have you in here. And James, are you really a 15-year veteran? Good stuff. Good stuff. Wouldn't it be funny if it were James Garza? Some of you guys know that guy. Used to teach this room. All right. We've got another 30 minutes, guys. Paid for. What would you like to talk about? Crude oil is currently weak triggers at a fib, and none of the triggers are broken. My rules say no trades into the area. I'm not sure what your rules say. Todd P, overwhelming, day one. You're like, oh my gosh. Sit boy, how we doing? Yeah, it is, Todd. I know it is. There's no doubt in my mind. I've been where you are. So let's go story time. So for you guys that are new, I want to explain where I came from. I spent 30 years in the service industry. I started waiting tables when I was a teenager, bartended the majority of my adult life, and then ultimately went into management. And I was a GM of a restaurant, and I enjoyed it, and I was good at it. And one of the things that I did for this restaurant is, as they expanded across the United States, they would send me their managed trainees, and I would teach them because systems and routines was my specialty. So what I would do is I would train these managers, and then in January of 2020, right before the world shut down, I had my second spine fusion, and that was the one that took me out of the game. It was a big one. Thanks, Lenny. And just incapacitated. And then March hit, and not only did I lose my job because my FMLA ran out, the world shut down, so I couldn't even find another job. It was a great timing, and my brother came to me and he said, dude, he goes, it's time. It's time for you to learn how to day trade. It's time for you to learn how to do this. And I said, okay, I don't know what else I'm going to do. And, you know, the government's giving me free money, so let's do it. And he told me, and this is for you newer guys. I want you to know this because I'm not telling you anything new. My brother told me, okay, Mark, here's what you have to do. He goes, I want you to write down these rules. And I want you to go take pictures of it. Just take 10 pictures of longs and go take 10 pictures of shorts and write the rules on there. And then he said, I need you to be in my classroom. We're teaching every day. And as you're simulating and as you're practicing, just drop your pictures in the room and we'll talk about it. And the first week, I started sending him pictures on Skype. I'm like, hey, did I do it right? And he finally said, dude, Mark, stop. I'm teaching a class. Go post in the room. Well, I didn't want to do that because I thought I was making mistakes and I was losing trades. And he told me, he goes, all you have to do is write down these rules, go take pictures of them until they become easy, and track it in a spreadsheet, Mark. Just put your trades in a spreadsheet and go back and study them a little bit until it gets easy. And because he's my sibling, and because obviously I'm brilliant, I didn't do it. I didn't write down rules, and I didn't take pictures, and I didn't participate in his class, and I never got feedback. And about 30 days in, I had gotten lucky enough on Simulator, and I believed I was brilliant, and I went live. And guys, I didn't have a prop firm like you guys had. I had an account with $6,000 in it. And mind you, I'm unemployed. And I believed I was going to make $1 million because my last name was Novak. I felt entitled to win. And it took 21 trades, approximately 2 hours to hit zero. Because I didn't know why I entered it, and I didn't know why I exited, and I didn't know why anything really. All I knew is that I was out a lot of money. And I didn't participate because for me, class was intimidating. And I kept hearing the phrase, it's obvious. Well, it's obvious this is your entry. It's obvious this is momentum. It's obvious that's a termination condition. You shouldn't have gone long. But none of it was. None of it was obvious. And I felt I felt very dejected. And I wanted to quit. And then what I decided to do, and I had two choices. I could either quit or I could go back and try to follow that path that my brother put in front of me, where he said, take pictures and post them in the room and show me what you're doing, Mark. He goes, there's nothing you can do that I haven't seen. There's nothing you can break that I can't fix. So I did it. And about 5 months in, I took all of my challenges that I had learning in that environment and simplified them down to a way. And that's when I started teaching a one-on-one class in the afternoon. So for you guys that are feeling overwhelmed, I've been there and I've felt overwhelmed. And I've figured out a way around it. And the way around it is simplicity. Understand momentum. And once you understand momentum, that separation of triggers, nobody can take that from you. That sticks with you forever. That'll be a part of everything you do with the software. And then you've got to be able to couple it with a termination condition. And trust me, this is the most broken rule out there because this is the one that forces you to be patient. But once you understand these two, guys, the entries present themselves. The trade plans build themselves. They really do. Because these Fibonacci areas are unfreaking believable, guys. They really are. And if you go back and just start taking some pictures and see how often they create bounces and see how often they stop the market and see how often weak triggers don't push, you develop trust. And trust doesn't come. It's just like a relationship. Trust doesn't come in a day or two, guys. The more pictures you take, and that's why I tell new users, give it 30 days. Give it 30 days. You'll know in the first week. You will know in the first week if this is right for you. If it works, you'll know that it works because you'll go back and circle these tails and you'll say, whether you're the swearing type or not, you'll say, holy shit, this works. And then you'll realize that you've just got to learn how to work it. You've got to learn how to see it quickly. You've got to learn how to read your indicators. And there's no doubt in my mind that it can be done. And I try to streamline it. So again, going back to my favorite picture, it should feel like this in the beginning, guys. You're a freshman in college on a campus you're not familiar with. By the end of the first week, you find all your classes. You can find the bookstore. You know where the food trucks park. And then it's just a matter of getting to your degree. So if you do feel a little overwhelmed, guys, it's cool. Know that I try to give you as little as you could ever possibly need to be successful. Good stuff. Good stuff. That's my story. And I haven't worked in the restaurant industry since I started with this. And I don't miss it. I still have nightmares about it. Still have nightmares about it. That's your stress dreams. Anybody get stress dreams? Mine's working in restaurants. Oh, you bet. Cav, have a great afternoon, man. Let me know if there's anything I can do as you work on this new stuff. I love seeing the next plans you guys come up with. They're a lot of fun. They're a lot of fun. And remember, trading's an individual sport. Hey, Todd, have a great afternoon, man. I appreciate you coming in and listening to me flap my gums for a little bit. We're going to do the same thing in the morning. It'll be easier. What is today, Monday? By Wednesday, you'll be picking trades out. Keep it simple. Thank you for being here. What do you guys want to talk about? This is your room. I like it. I'm excited about it. This is your room, guys. We do have a termination condition, but my smalls are still down, my large are still down, my synthetics are still down. There's nothing that says go long, right? Too soon for a long, too aggressive for a short. Guys, if you can't go long or short, if you can't find rules met either way, what do you suppose your best option is? Nothing, right? Let's do nothing. Let's wait. Let's see how they react. Let's see if they make momentum. Fun stuff. All right, I'm gonna hit the mute button for a second, guys. Post them if you got them. Oh, hold on, Andy. I'm sorry. Andy did post it. He's like, dude, Mark. Odds favorable momentum, not a clear path, but it is a second pullback. Pulls back to the mid band right there, coming off the termination. Everything says down. I like it. All your charts agreed. Nice. So, Andy, you want to big picture it? And guys, this is patterns. I'm going to show you something cool, Andy. And you may not have recognized this read. So this is a weak bottom, right? It's not a termination that reversed the market. And very often, especially an established downtrend, if you have a weak bottom, it pulls up to maybe a fib or 1-to-1s or the mid band, and then very often it continues down. And what you did, Andy, is instead of hoping that it went down from way out here in the middle of nowhere, is you let it start down and you grabbed that little pivot and just got it as it went down to the Fibonacci area. I love the read. It's a good one, man. That weak bottom sets the tone for more down. That weak bottom sets the tone for more down. That weak bottom sets the tone for more down. Uh-oh. Now we have a pattern. That weak top sets the tone for more up. There's another weak bottom right to the mid band. Triggers say let's go down and it keeps going down. Pretty cool. Patterns. That's all we do. You're welcome. They look like they're trying to put a bottom in, don't they? Weak triggers, add a fib, pivot stop out, 3 divergences, and now my large triggers are finally starting to roll. What are you working on, Joel? Weak tops and bottoms. 3 rules turn into 1,000 things. They do. All right. I think the most valuable lesson you can get, and Joel, I think through all the pictures you show me, this is probably the most valuable picture I can show you. There's a way to commit financial suicide, guys. The first one is trading against strong triggers, no matter what your opinion is. Red line, blue line, 1-to-1s, doesn't matter. If you're fighting strong triggers, it's less likely to win, plain and simple. And then trading into termination conditions, making sure that you're not trading into areas that could stop the market. If you guys can pull these 2 things out of your day, you are better off than I would say 60 to 70% of the traders that I've met in my life. Because to do either of these is not following rules. These are opinion trades. These are hope trades. These are wish trades. And those run out. Luck runs out. Has anyone ever noticed that on Simulator they're a millionaire and then when they go live, they flounder? I did that. I was a sim millionaire and then an account drainer when I went live. Because I wasn't giving myself good lessons. I wasn't giving myself best trades, highest advantages. I was making money on Simulator. Let me show you how easy it is to make money on Simulator. Well, let's see. There's a 17 lot, and I think it's going to go up. So I'm going to buy the market. That's it. Let me put my stop way down here where I hope the market doesn't go. I don't care. It's Simulator, right? What's going to happen? Let me put my target past this fib, past this fib, past this divergence high, all the way up here because that's where I hope it goes. Now, guys, what happens if this market goes up and I get paid? I suddenly believe that I'm a genius. I suddenly believe that this is my trade. And because I'm trading 17 contracts, I just hit close right now. I'm up $600 on the day, guys. I'm brilliant. Nothing bad can happen to me. alpha. What's the reality? The reality is I'm not up $580. I stacked my contracts and I made 2 ticks fighting everything, hoping the market would go up. And look what it's doing. Now it's going down. But I believe I'm infallible. I believe I'm invincible. Guys, practice like you want to play. When you take trades, take the right trades. When you're practicing trades, when you're on market replay, take the right trades. The I hope trades run out, guys. They typically do. That's one of the best lessons I think you could get. John didn't tell me that. John didn't tell me don't take the wrong trades. He probably did, but I didn't listen. Trying to follow the rules, so much more important. All right. Say one more thing. Where is it at? All right, guys, I'm going to give you this document, and this is how we'll finish today. So live, 5 days a week, guys. Nexgen will teach you 3 rules on only 2 charts. And this is to give you the skill set to recognize advantages and then turn those advantages into trades. Each rule will be discussed individually. You will understand how to use them to enter the highest probability trend trade taught. You're going to get the advantage of momentum through strong trigger lines, the advantage of a clear path with no terminations, and the advantage of entering the market where the market is most likely to continue. This is my speech each and every morning. And I remind you that momentum and path are the core. And these 2 concepts are alone are enough to create a trading plan, guys. So every morning I remind you 3 rules, 2 charts, understand the foundation. We're going to talk about the rules. We're going to talk about the charts. We're going to define the triggers. We're going to talk about the areas. You're going to be able to recognize momentum through strong triggers. You're going to be able to recognize the areas that can be termination conditions, how to define them as a termination conditions, how to define a strong top or bottom, and what it looks like when they break. You're going to be able to define your entry. You're going to know exactly how to do it and how to study it. Everything that we've talked about for the last 3 hours has been consolidated into 2 pages into this Trend Trade Simple. If you can stay inside of these boundaries for the first 30 days, you'll walk away from that 30 days with an amazing skill set. Andy, it took you a good year before you could even understand John teaching, but Mark teaching is baby step easier to understand, Kiss. Thank you for that. I always tell my brother, I said, my brother, John Novak, is brilliant. And if you spend 2 minutes in a room with him, you realize that he's brilliant. I had no idea when we were kids. I don't know when the change came. But one of the things about brilliance is it's hard to come down a level to teach. It really is. I had a neighbor that was a brilliant engineer, an amazing engineer. And he got a perfect score on his SATs in math, just to give you an idea how smart he was. And when I took college algebra, because I'm a daydreamer, it was a big struggle for me. So I thought, who better to tutor me than the smartest guy I've ever met in math? And guys, it was the worst thing I could have ever done. Because where I was trying to figure out what X was, he was 32 steps ahead of me. Well, that's all easy, so let's go to this harder shit. And I'm like, that doesn't work that way. It doesn't work that way for my brain. My brain needs simple. And he couldn't do it. And we were great friends forever, but he was the worst teacher that I ever had. And I try to teach this room under the same concept that everybody is at 0. And if we don't build from 0 together, the rest of the numbers are irrelevant. They don't matter. So, good stuff.